morning, my name is Carl Williamson and I'm speaking to you from our London office. It's May 2022. I'm the manager of the Nexus Global Solutions Portfolio and the Nexus Global Dynamic Portfolio. The first quarter of the year was a challenging one for markets despite some respite in March. April proved no different. The war in Ukraine, the COVID lockdowns in China and the prospect of far tighter monetary policy in the US all weighed on equity markets. Global equities were down by around 8%, with growth stocks underperforming value stocks. Growth stocks were down by around 12%, value stocks down more like 5%. Against this background, the Nexus Solutions portfolio was down 3.6%, the Nexus Dynamic portfolio was down 6.5%. That takes the year-to-date numbers down 8.5% for the Nexus Solutions portfolio and 10.3% for the Nexus Dynamic portfolio. Oil stocks continue to perform well, as did some more defensive stocks, such as drug stocks, including Sanofi and Merck. Fixed income continued to come under pressure and global bonds lost about 5.5% in April, as US Treasury yields approached 3%. Expectations for the path of interest rates have moved significantly this year, with rates now priced in well above 2% by year end in both the UK and the US, and rates in the Eurozone moving positive by Q4 of this year. Overall, hedge funds made a positive return, while private equity and property struggled. At this stage, around 55% of companies have reported, and overall, companies are beating expectations, with around 80% beating estimates. The year-over-year earnings growth is now expected to be in the region of 7.1%. Labour markets continue to be the bright spot, with unemployment rates in the US, the Eurozone and the UK near record lows. Despite wage growth, consumer sentiment, however, continues to be weak. The advanced US GDP number came in at an annualised rate of -1.4%, which was below expectations and the first contraction since mid-2020. So yesterday we heard from the Federal Reserve and they raised interest rates by 0.5%, with the expectation that there will be two further rate rises of 0.5% at the following two meetings and quarter-point rises for the rest of the year. Today, here in the UK, at lunchtime today, we also expect the Bank of England to raise interest rates from 0.75% to 1%. Inflation is elevated, however, we continue to believe it will moderate in the second half. Central bank policy is front-loaded, but we now think a good deal of this is priced in. We still believe that the earnings trajectory and the economic background remain sufficiently robust that equity markets can continue to perform well, albeit we expect continued volatility. Thank you for listening. I look forward to speaking to you next month.